everybody, this is Swati Gupta, Chartered Accountant. From today onwards, we are starting a new subject, that is CA Final Financial Reporting Paper number 1. We strictly adhere to ICA content. Okay, there are 17 chapters available in your ICA module. We will cover them one by one. After completing each and every chapter, what I will do, I will update this index with number of live lectures and the amount of duration that we have taken to complete each and every chapter. Okay. Now, the lectures are available in Hindi and English, both the languages. On the store, there is separate courses available in Hindi and English. Whichever language suits you better, you can enroll in that. Okay. The pattern remains same. Firstly, we'll discuss each and every concept and understand the concept of each and every chapter. Firstly, and then we'll head towards the question answers, illustration and examples of ICA content. Okay, let's begin. Firstly, chapter number 1. You can find all these videos and the PDF material on the app. They are downloadable. Okay, to download the app, what you can do, you can find the link in the description box. The link is also applicable for iOS systems. Okay, so if there is iOS, what you have to do, you have to follow the link. It will direct you to Class Plus app. While downloading the app, what you have to do is you have to use organization code HSGGO. You will get, after login, you will get all the access to the courses and the PDF notes. You do not have to buy any sort of PDF notes separately. Okay, the same video lectures, live and recorded, can be viewed on both mobile app and laptops and PCs. Okay. Let's begin with our lecture number 1, chapter number 1. For any doubts, you can definitely reach out to me either by downloading the app or on Instagram or in the comment section. Okay, let's begin. Chapter number 1. It deals about the framework of Ind AS. What is Ind AS? Indian Accounting Standard. Okay, so Ind AS framework is neither a standard. This is important. Framework here is neither a standard nor it has any capacity or power to override any Indian accounting standard. Neither it is Indian accounting standard nor it has any sort of power to conflict or override any Ind AS. Okay, it basically provides the basics, the structure, the guidelines to build up all the Ind AS. Okay, now it is important, it is very important for the standard setters, the people who prepare these Indian accounting standards. This framework is important for them. It works for them. It gives them guidelines so that they develop consistent accounting policies and standards. Okay. Now, if you talk about each and every standard, you will see there is objective given, there is scope given, there is applicability, non-applicability. Then further provisions are given. Same style of numbering is done. The curves are mentioned in the end. You know this? There is a set pattern. Where is it given? It is given in the framework. So whenever any person who is making the standards, drafting this Indian accounting standard, has to follow this framework. Okay. It is also useful for the people like you and me who want to understand Ind AS, who want to prepare their financial statements according to Ind AS. Okay. So basically framework is neither Ind AS and nor has power to override Ind AS. Okay, also it is applicable or helpful for two people. What are those? Firstly, standard setters who prepare the standard, and secondly, person who are interested or who want to prepare the financial statements according to Ind AS, who want to understand Ind AS. Okay, that's it. Secondly, next, the framework provides us basic structure and definition. You do not need to write down all these, but if you want, you can note it down. The same PDF is available in the notes form in the content area. Okay, the content tab is there in the app. These PDFs are available over there and they can be downloaded. It can be viewed on mobile app and the laptops and PCs. Okay, in case of any doubt, reach out to us. If you are attending the live lectures, there is live chat box available, and if you are viewing the recorded lectures, there is also a chat box available. There's group discussions and you can even talk to me in person. Okay. So, firstly, framework is basic structure and definition. Purpose of the framework, it helps you to develop new Ind AS. Okay. Whenever a new Ind AS form, framework helps to develop new Indian accounting standards and review the old ones, okay, hand in hand regularly. Each Ind AS is reviewed again and again, so that it has any loopholes, or it has it left any important information, anything that needs to be removed or should be added. This is known as review, okay. So framework helps you in developing new Indian accounting standard as well as reviewing the old Indian accounting standard. It helps assist the users of financial statements in interpreting the financial statement. I told you, the people who are preparing the financial statements and want to understand Ind AS, framework helps them, providing guidelines to the preparers of financial statements, that is preparer of the financial statement like you and me, the people who are working in the actual organizations that are preparing financial statements. They need to understand Ind AS. What helps them? Framework helps them. And lastly, assist in harmonization of regulations and standards. If there is any sort of conflict, framework provides which provisions will be given priority and which will be held secondary. Whenever there is dispute, who solves in? Framework solves in, okay. Framework cannot override Ind AS. What does override over here means? Override means it cannot contradict Ind AS, okay, any Ind AS. Any doubt till here? You can definitely ask me. Now, if your statements, if your financial statements are prepared as per going concern assumptions, then you have to use Ind AS for assets, liabilities, incomes and expenses. But if you are preparing your financial statements as per liquidation basis, where you are not in a capacity to follow an assumption of going concern, then what you have to do? You have to record your assets and liabilities at realizable and final payable value. What will be the final outflow or what will be the final inflow? You have to record those assets and liability on final realizable and payable value, okay. Whereas if we talk about income and expenses, you have to record them at residual value, okay. Now, what are these values, how they are calculated, we will deal with it in specific Ind AS. It's just an overview about all the Ind AS, but it is important chapters because questions are given, okay, in the ICI module. Also, it helps you get a vision about all the Ind AS, how it works, how it is prepared. The purpose of conceptual framework under Ind AS can be summarized as below. Firstly, standard setting, assist ICI in formulation of Ind AS, formulation to be based on consistent concepts. It helps in standard setting, it helps standard setters. We have learned this concept. For next, consistent preparation. Everybody, whenever new standard is developed or the previous one is reviewed or any addition or deletion is made, it will be done in a specific consistent manner. It will be done in a consistent manner, okay. You know, they will be following the same pattern as in which is laid down in the framework. Thirdly and lastly, it helps interpreting the Ind AS. The people who want to understand Ind AS, the people who want to prepare the financials as per Ind AS, okay. This is the basic purpose. What are general purpose financial statement, GPFR, okay. Now, the objective of general purpose financial statement is just to provide the useful information, only the useful information to the existing and potential investors. It is a summary format and does not give detailed out information, does not give all the information, okay. It only provides information in a format, in a way that is available to the potential and existing investors. The people who cannot demand any sort of reports from the entity, okay, they can only view the financial statements that are generally available. In making the decisions, in affecting the decisions like either they should buy more, sell more, keep holding, or the instruments, okay, like for example providing or settling the loans or other forms of credit. For example, you have a supplier, okay, and from that you buy on credit. What they will do? They will continuously review your credit position. If my entity is alright, it's in a good position, it's profitable, then they will keep supplying me on credit. If they come to know that I have gone bankrupt, then will they provide credit? Will they provide more credit? Will they be interested in supplying material to me on credit? No, because there are chances of bad debts. There are chances of higher bad debts. Okay, even I can go bad debt, even I can go bankrupt and they will receive a nil penny. this may be the case. So they keep on reviewing the position, okay, and they keep on assessing whether they should continue dealing with the entity or not, okay. So this financial position, this financial reporting helps them to know, helps the investors, helps the creditors, helps the helps other entities to take their economic decisions, their financial decisions, either to provide more credit or to settle the loans and get it settled, okay, either to settle the loans, or they can give me ultimatum that you have to deposit the due amount in this date and further supply will not be done, okay. So this is how the business works. So this general purpose financial reporting helps them to take action accordingly, okay. If I am a healthy organization working in a good financial position, profitable, they will not mind giving me credit, they will not mind supplying material to me on credit, okay. Whereas if I go bankrupt, then the case will be vice versa. In exercising rights to vote or influence management actions that affect the use of the entity's economic resources, okay, these small concepts will deep dive in further slides, okay. What is this? This helps them to exercise their rights, whether they should interfere in management's decisions, whether the management is taking right decision or not, okay. This can be reviewed from where? This can be reviewed from general purpose financial reporting, but there are certain limitations, since it does not provide all the information that is required. It cannot provide all the information. It is not designed to show the value of a reporting entity, okay. It does not provide the value of the reporting entity. If this entity is sold today, then what will be the realization value? It is never sold in that way. It is assumed going concern basis, and the valuation is done according to the Ind AS, okay. It is never for the value of the company, okay. It never values the company. Instead, it values each and every asset and records them according to the standards. Are not primarily directed to other parties such as regulators. These general purpose financial reporting give you information, give the existing and potential investors the information that they want for decision making. It's all right, but they are not in a format. They are not in a format that can be submitted to any regulatory body. For example, you have to submit it to Income Tax Authority, to ROC, to SEBI, any regulatory body. You cannot submit this general purpose financial reporting, okay. So it does not provide all the information. It is not designed to value the reporting entity entire valuation, and thirdly, it cannot be submitted to any regulatory body, okay. There are 3 limitations given. Are you getting? Are you okay with me? Are you able to catch up? In case of any doubt, please let me know, okay. I'm happy to solve all your doubts. It makes me happy, okay. Information provided by general purpose financial report, what are they? This is financial position, means assets and liability. Here, okay, while we study framework, assets are known as economic resource of an entity. Assets are known as economic resource of entity, and while we talk about liabilities over here, it is termed as claims. Okay, assets are termed as economic resource of entity and liabilities are termed as claims. Whereas if we talk about effects of transactions that change entities' economic resource and claims, it talks about financial performance, that is comprehensive income, where we know that P&L has 2 parts, P&L and other comprehensive income, and total becomes total comprehensive income. So if we are talking about P&L in short, okay, the cash flow and the change not resulting from financial performance, for example, issuing of shares. So here it gives you details about the assets and liabilities, and also the comprehensive income, cash flow, and the changes that are not resulting from the shares, from the shareholders' position view, okay. There is no additional issue of shares or buyback of shares. Other changes are recorded. Next comes qualitative characteristics of useful information. Here, as per ICAI and Ind AS, there are 2 qualitative characteristics. First is relevance and second is faithful representation. What does relevance means? Relevance means any information Relevance means any information that has capacity to influence the decision of the user. Okay, if it has capacity to impact the decision of the decision maker, it has capacity to impact the decision of the user, then such information is relevant. Okay, this is also a very close concept to materiality. Let's read. Firstly, it can be two. We'll discuss this. Okay, makes it capable of making a difference in decision making. Okay, a capable of influencing the decision of the user, then that information is termed as relevant. Okay, if you mention any information, for example, you bought something of rupees 100 and the company is of hundreds of crore, will this 100 rupees matter? No. Will this 100 rupee information impact the user's decision? No. Okay, so such information is not relevant. It makes it relevant for the financial information. Relevance also includes the concept of materiality. Okay, faithful representation. Faithful representation means that after identifying that the information is relevant, important, has the capacity to influence the user's decision, then next important characteristic comes is that you can measure it and classify it, whether faithful representation can be done, whether it can be measured and can be classified properly. Okay, the information should be complete. It should be neutral. Neutral means it should not be biased. It should not be that you have highlighted the deposits in some other neon color, okay, or kept it bold, underlined. No, the entire balance sheet should be with same font. Okay, same font, same size of the font, same color. Okay, even if you have highlighted the headings, you have to highlight all the headings. If you have not highlighted any of the subheading, you cannot highlight any other subheading. Okay, these all should be in uniform basis. What should be followed? Uniform basis. None of the information should be highlighted, slanted, weighted, bold, colored. Okay, separately, none of the information should be highlighted. It should be free from bias. Okay, without bias of selection and presentation of financial information. Neutrality is supported by exercise of prudence. For example, not slanted, weighted, bold, colored, highlighted, etc. And thirdly, it should be free from errors. So you will consider it that faithful representation is done if it's complete. Complete means it can be measured, the amount can be measured, and right classification can be done. It's neutral and free from errors. Neutral means it should not be highlighted in any format, and it should be free from errors. So these are two important qualitative characteristics that every financial information must have. Next comes concept of predictive and confirmatory values. See, now we have learned this first line, financial information with predictive value or confirmatory value or both. See, simply an information can be predictive, can be confirmatory, or can be both. What does predictive means? What does confirmatory means? Let's see. Financial information has predictive value. If it has capacity that on the basis of this particular information, further predictions or forecast can be done. For example, if we talk about current sales, current sale is 1 crore rupee. This 1 crore rupee current sale has the capacity that on the basis of this 1 crore sale, we can predict, we can make an approximate forecast that in future year and in the next year, in next quarter, what will be our estimated sales. Can it be done? If it can be done, okay, if such value has such capacity that on the basis of this further forecasting prediction can be done, then this current sales value is termed as that it has predictive value. It has predictive value. Also, now for previous year, there was a prediction made for the current year. Okay, for example, the prediction was made approximately 1 crore 10 lakh rupees of sales. Now the current sales is 1 crore rupees. Okay, so this 1 crore rupees has confirmation about previous predictions. Okay, and information can have both predictive and confirmatory value. Read the text that is given. If it can be used as an input to processes employed by users to predict future outcomes, financial information need not be a prediction or forecast to have predictive value. It should not be itself a forecast. The current sales of rupees 1 crore need not to be a forecast, but it should have capacity to make further forecasts. Okay. Financial information with predictive value is employed by users in making their own predictions. Okay. Financial information has confirmatory value if it provides feedback about confirmation about the previous evaluations. Okay, previous predictions can be confirmed by current figures. The predictive value and confirmatory value of financial information are interrelated. Information that has predictive value often also has confirmatory value. See, read out this example, you will get a better understanding. Read this example. I'm waiting for you. Read this example. Current year revenue can be used to predict future revenue, as well as also to compare and confirm with revenue predictions that were held last year. Okay. Any doubt? Let me know, please. In the comment section, if you're using the app, you can write me in the chat box. Also, there is a group discussion available. You can drop your query over there. Any format. Okay, next, also the same lectures are available in Hindi language. Okay, so if English doesn't suit you, it's totally fine. You can enroll in that Hindi course. Applying the fundamental qualitative characteristics, what you have to firstly identify. Now there are relevance and faithful representation. There are two concepts. There are two qualitative characteristics. How to apply them? Firstly, you have to identify an economic phenomenon, information about which is capable of being useful to users of the reporting entity's financial statement. It should have capacity to influence the user's decision. If it is relevant, if it is that important, you have to identify those information. Then, secondly, you have to identify the type of information that needs to be presented, that needs to be disclosed about that particular event or transaction. Firstly, identify the transaction, the economic event that has capacity to influence the user's decision. Secondly, what you have to do? You have to identify the information that should be explained, that should be disclosed about this economic decision or event or transaction. Thirdly, you have to determine whether that information is available and whether it can be faithfully represented, whether particular perfect amount can be measured and can it be classified in particular head. Okay, so you have to ensure that faithful representation can be done. It's complete, neutral, free from errors. It can be perfectly or it can be properly, the amount can be recognized and the class can be recognized. Okay, so these are 3 steps that you have to use while applying the qualitative characteristics. Next, there are 4 enhancing qualitative characteristics. First, comparability. Comparability means the information must be must have a specific unique feature that it can be compared with some other entities and within entity with different periods. Okay, so while you are comparing the information with different periods like previous year figures and current year figures, previous quarter figure and current year quarter figures. Okay, so this is comparability intra. This is intra. If you are comparing within the organization with different periods, this is intra, within the company, within the entity. If you are comparing with other entities data, then you have to then also it is comparability. So it can be 2, either between 2 entities or within the entity in different periods. Read this. This comparability is very important because then you come to know what is going on. Either there is any improvement chances, or there is any scope, or other entities are doing better. Why? You can note it out. Okay, why, how they are doing it. Okay, also by comparing your own financial position of previous and current, you get to know a better understanding where is the trend going on. It is increasing or either it is decreasing. Okay. Next, verifiability. Verifiability means getting it confirmed. Means that different knowledgeable or independent observers could reach consensus that a particular depiction is faithful representation. Okay, if you get a confirmation with different observers and independent people that such particular information is what? Faithful representation. It is complete, it is neutral, it is free from errors, and other than this, if we talk about complete, the amount can be measured, the class can be recognized. If it is there, then it is known as verifiable. The information is known as verifiable. Verification can be either direct or indirect. Okay, it can be either direct or indirect. For example, like counting cash. If you have to check cash balance, what you can do is you can go and do the physical evaluation, do the cash counting, or you can do is verifying the carrying amount of the inventory by checking the inputs. There are different methods by calculating the material, labor, overheads and all. You calculate and see the amount of inventory that you have put in, the cost of that, and can measure it. Okay, so these are different methods by which you can verify it. So there are 4 important characteristics that enhance the application. First, comparability. Second, verifiability. Next, third and fourth comes timeliness. The information should be available as and when it is required in the format that it is required. Okay, the information while making the decision, if it is not available, then it is not a good feature. Okay, then it is like useless. So timeliness is very important feature. Characteristic: having information available to the decision makers in the time when they are capable of influencing their decisions. Understandability is very important. Classifying, characterizing and presenting information clearly and concisely makes it understanding. Every person who is preparing their financial statements is classifying the current assets as under the head current, non-current assets under the head non-current, liabilities, equity in the same headings. Okay, so it makes it more understandable that their non-current position is this, current position is this, their asset position is this, their liability is this. Okay, so you get to know a better understanding if the perfect classification and presentation of information is done. Applying the enhancing qualitative characteristic is an iterative process. It has to be applied again and again and again. Every time you prepare a financial statements, you have to go through them. Every transactions that you are recording, you have to make sure that it is relevant, it is faithfully representable. Next, there are ICA examples that are given. We'll cover them here itself. What you can do is you can open your ICA module and refer with me, along with me. Okay, take highlighter or a pen or a pencil and mark it as and when it is done, the way I am doing it. Okay, so it helps you too much while you will be doing revision. I'll make sure that you are doing 5 to 6 revisions with me. There are continuously tests held after every 2-3 chapters. You have to prepare for that. I strictly adhere to ICA content. Even the questions, the answers are taken from the ICA. I'm preparing for the ICA exam, so we will be covering the ICA module. Okay, so open your ICA module and refer the question and answers. If it is not available with you, don't worry, you can download the same PDF and mark it as you want. Okay, first example, revenue information for the current year, which can be used as the basis for predicting revenues in future years. Okay, so this has prediction value. Read this. This is same example of current sales value, current sales example, that it has predictive value, it has confirmatory value. Can also be compared with the revenues of prediction for the current year that were made in the past. Okay, so it has confirmatory as well as predictive value. Second example, a complete depiction of group of assets would include at a minimum a description of the nature of the assets in the group, a numerical depiction of all the assets in the group, and a description of what the numerical depiction represents. For example, historical cost or fair value. Okay, so it is faithful representation. Faithful representation means right classification and right amount measurement. Okay, so while you are presenting the asset, what you have to do? You have to present the nature of the asset. the numerical depiction, that means the amount, the right class should be identified. Okay, and if there is any other information like the particular asset is mortgaged, so you have to put that also as a disclosure in the while presenting the financial statements. Okay, so it is talking about what will be considered as faithful and complete representation when you talk about, when you disclose all the nature, the numerical depiction, the perfect class while presenting the financial information. Third example, the use of reasonable estimate is an essential part. Okay, estimates have to be done, so reasonable estimates can be taken for the preparation of financial statement. Example of estimates could include useful life of an item of PPE, property, plant and equipment, net realizable value of inventories, fair value of investment in an unlisted entity, provisions for doubtful debt, etc. Okay, you have to make an estimates. So these estimates can be taken, but it has to have reasonable basis for it, reasonable disclosures for it. Okay, as long as the estimates are fair, even further on the date on which the information gets confirmed, okay, the uncertainty gets resolved and it is different from the value, from the estimates that you have taken. Okay, it is all right. See, read this sentence. As long as the estimates are fair, the financial statements will be concluded to be free from errors, even though the actual outcome may be different from the original estimates. Even though the estimates are different from the actuals, then also if that point of time it were fairly taken, it had reasonable basis to be estimated, it will be considered free from errors. Okay, next, financial statements and the reporting entity. Sometimes one entity parent has control over other. See, if there is parent and subsidiary relationship, parent and child or parent and subsidiary relationship, then if you combine these financial statements, it is known as consolidated. Okay, consolidated FS. If parent and subsidiary relationship is not there, instead it is associate, joint venture, whatever, okay, or subsidiary. If such relationship is there and parent subsidiary relationship is there not there, that means none of the entity is having control. There is no control. None of the entity has controlling power. In parent and subsidiary, parent always has holding or controlling power. So if in a case, in a relationship where there is no parent and subsidiary relationship, such financial statements are considered as combined financial statements, combined FS. Okay, so if there is parent and subsidiary relationship and their information is consolidated, their financials are grouped and submitted, such are known as consolidated. If there is no parent and subsidiary relationship, such information that is grouped are termed as combined financial statements. Okay, and the standalone are known as unconsolidated. The same information is given over here, you can read them out once. Link between information. Okay, there is economic resource. You know, economic resource means asset, claims means liability. Asset, a present economic resource controlled by the entity as a result of past event is considered as asset. Okay, any transaction that you did previously, okay, you bought it, you rented out, whatever, okay, you leased it out, you taken on lease, whatever it is, you have taken on EMI, due to any past event, you have a control on any resource, then it is known as entity's economic resource, that is asset. An economic resource is a right, okay, that has the potential to produce economic benefits. Asset has a right. Asset, what is asset? Over here it is a right that helps you, that makes you capable of having potential economic benefits in future. Okay, now what is claim? Claim can be liability or equity, a present obligation of the entity to transfer an economic resource as a result of past event. And equity means the residual interest. What does equity get? Equity always gets after paying off the creditors and all, and if then also surplus is left, it is distributed to the equity. So the residual interest holders are known as equity. Economic changes in economic resources and claims, that means income. If it is favorable, then it will be considered as income. If there is increase in asset or decrease in liability, it will be considered as income. If we talk about if there is unfavorable, that is decrease in asset or increase in liability, then these are termed as expenses, okay, reflecting the financial performance. Other changes in economic resources and claims will be contribution from shareholders of equity claim and distribution to them, like dividends and all. Exchanges of assets or liabilities that do not result in increase or decrease in equity, okay, any exchange of asset like that. These are specific terms that are described in the framework, okay. Now last topic that we'll discuss in this lecture, we'll keep this lecture short and light, okay. In next lecture we'll cover the further chapter, the remaining chapter, and then after that we'll cover the question and answers. Asset has three key aspects. Now for recognizing any economic resource as an asset, it should have three particular specific characteristics. Firstly, there should be right. Secondly, there should be control, and thirdly, it should have potential to produce economic benefits. We will deal with each and every of these three aspects separately, okay, and in detail in next lecture, okay. Now, one important thing before we end this class, you have to record each right separately. According to what? According to the rule that every right is what? Is a asset, is an separate asset. How come? Like for example, if you have a land, you have right to sell it, you have right to build a complex over it, you have right to put it on rent, you have right to put it on lease, okay. Many of these things can be done, okay. So there are 4 rights, for example, on the land. According to the rule, according to the principle, each and every right is separate asset. But for the accounting purpose, what we do, we accumulate all the rights relating to the same asset as one particular asset while recording. Read this note. In principle, as per the rule, each of an entity's right is a separate asset. However, for accounting purposes, related rights are often treated as single unit of account, that is single asset. Okay, so for this lecture, that's all. There are further lectures available in Hindi and English, both the languages, on the app. So don't forget to check out the description box. In case of any doubt, please reach out to us. This is Swati Gupta signing off. Take care, be safe, stay tuned.